Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekook.com and on Twitter using the handle thekook. Stephen, good morning.
Top of the morning, Sean.
Stephen, I do a lot of interviews every week, and yours is my favourite.
Oh, that's really kind of you. I do a lot too from the other perspective, and I love doing the Fear and Greed week ahead.
Yeah, I just now look, so much going on this week, but we better just quickly check in on what happened last week. We had retail trade, we had capex figures, we had building approvals, but of course we had monthly inflation, the big one.
And I think at the end of the week last week, when we sort of were able to digest, exactly what the domestic data in Australia was telling us, it sort of confirmed a few things. The economy is definitely slowing down. The retail sales were weak. The capex numbers were okay. We had a plus 0.6% as businesses are ramping up a bit of investment in machinery and equipment and in structures, things like warehousing and things that are being built, and hotels. There's a shortage of hotels in Australia. So the capex numbers were pretty good. But the big one was the inflation, the fall in inflation. It came in annual terms at 4.9%. Now, you might think that that's quite high, but a couple of things. One is that it was lower than even the low end of market forecasts. And the other thing, which I think is the thing that's sort of grabbed the market's attention, is that in the next 2 months, so the November and December monthly data, and then, of course, the December quarter data, when we get that in late January, has a very big increase dropping out of your year-on-year run rate. So just as a way of illustration, and this is why the market's pricing out rate hikes, if we get, say, a 0.3 and a 0.3 for the next 2 months, just for argument's sake, the annual inflation rate drops to 3.0% in December, which is top end of the target range and something that's the RBA would be delighted to see because they're getting close to getting to the midpoint of their inflation target, probably a year earlier than they're anticipating.
Pretty amazing. So with all that as background, this week, massive week. Reserve Bank, of course, tomorrow.
Reserve Bank tomorrow. And, as we've just discussed, I think that from what Michelle Bullock was saying when they hiked rates in November, so just last month, and some of her comments during the intervening period, including last week in Hong Kong, she mentioned the economy was resilient and demand was a little bit stronger and the inflation pressures are homegrown as opposed to sort of international pressures. And that's all fine and dandy. But I think with the news, the economic news that came out last week, it might just sort of put a little bit of a tarnish on that particular view. So the overwhelming consensus is that there's no change from the RBA tomorrow. The money markets have got about a 4% chance pricing. So they've just got a rough chance that they do deliver the rate hike. So basically non-existent. But the other thing that the markets will be looking at is just what will the RBA be saying about that monthly inflation reading? What are they saying? Do they still think the domestic economy is resilient? And of course, last week we saw house prices coming off the boil. They're still rising, but not as much as they were. Melbourne's actually going backwards, which is a curious thing. So, but yeah, there's a lot of information for that RBA board meeting, but I think it's safe to say on hold, go away for the rest of December and enjoy the summer holidays in January and come back for the February board meeting when they've got the quarterly inflation rate and a whole lot of other economic news as well.
Okay, well, something to look forward to. Now, the other thing out this week is the economic growth figures for September quarter. Backwards looking, I know, but, are we ever going to have a recession? I mean, I suppose this number's not going to show that. What will it show, and are we going to get there eventually?
Look, I think for Wednesday, when we get the September quarter GDP numbers, as you touched on, probably growth about 0.5% quarter on quarter. That brings the annual figure to just 2%, maybe a smidge under 2%, about 1.8, 1.9% in annual terms. So the economy is growing, but not much. I think what we'll probably see if we get a figure like that, or even if there's, say, a 1/10 undershoot, is that we'll probably have the third straight quarter where in per capita terms, we're going backwards. So we've got that per capita GDP recession. So in a sense, when you analyse it in that particular manner, the only reason why we're getting positive economic growth is because there's so many people here. And, that big influx of people, they eat and they spend money at the shops and they, obviously demand housing and that sort of stuff. So that keeps the economy growing. But in per capita terms, we're still sort of fairly sluggish, fairly weak. But, the interesting thing in the national accounts, the GDP data will be what's driven GDP, what's happened to government spending. We know that household consumption is going to be pretty miserable, I think. And as we just alluded to, the CapEx numbers, business investment's probably okay. So I think it'll be one of those numbers where, the soft landing is still on track, I think it's fair to say. And so the risk of recession in a genuine sense is still pretty low.
Okay, a few other partial indicators this week. Job ads will be interesting. Pretty much we think that unemployment rate will start to rise from here, but
Job ads all important, and they're a lovely leading indicator for what's happening to future employment intentions. Because obviously, a firm doesn't put an ad online to hire people if they're not doing well. And we know that the job ads have been trending down the last 6 months or so. Any further weakness will be a sign that the unemployment rate is probably going to keep ticking up through early 2024. So big news on the job ads numbers. Very important for the health of the labour market.
Stephen, enjoy your week.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on X using the handle TheKouk, TheKouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.